Good morning and welcome to Morning Markets with True Financial. Today we'll be focusing on some business sentiment data coming out of Germany yesterday, and we also focus on Chinese central bank intervention on the currency front. As discussed by Kevin yesterday, we saw a broad-based weakness at back end of last week. That weakness continued yesterday in European markets. We saw all risk assets were softer. We also saw some weakness in the currency markets, but bond markets was largely flat on the day. What's behind the weakness in European markets yesterday? It was the business sentiment data coming out of Germany. We saw IFO business sentiment weaker again, consecutive months of weakness from May and June as well now onwards. What's been behind the weakness? It's a manufacturing data. We know the manufacturing have been weaker. The new orders have been falling in Germany. That has meant that the weakness has been much more entrenched. We also saw services data also weakening in June readings. So that clearly indicates the European recovery, which we saw earlier in the year, is clearly fading. What's been behind this fading in economic activity in Germany? It's been the weaker than expected recovery in Chinese data. We also know that the central bank tightening that has gone in the past past few months have also taken a sentiment away from from business investments, and also fears of recession has been increasing overall in general. So all in all, the optimism seems to be fading in Eurozone and the largest economy in the Eurozone. What could turn things around? It would be, again, to say the obvious, it's probably the Chinese, if we see better than expected data coming out of China, or a continued drop in inflation prints, which have been lately coming out softer. We know the purchasing price indexes, the input inflation cost have been coming down in Europe. So that could also provide a boost to sentiment going forward. In fact, if you focus on Chinese data, the Chinese data have been coming at slightly better. We saw yesterday the authorities delivering a positive tone yesterday. We saw Chinese Premier Qi Ling delivering a message that the Q2 growth could be better than the Q1, the 4.5% year-on-year growth we saw in Q1. Authorities indicating that the growth could be much stronger in Q2. In fact, the data is coming out much stronger than expected in Q2 so far. What's in store for investors today? We have got US consumer confidence data and also home sales data. The expectations are for stronger readings on both fronts. We'll see how it comes across, and we will, as always, we will keep you posted on developments and how markets are reacting to that. But for now, we'll leave it there, and thank you very much for watching Morning Markets.